Nico. Good morning, everyone. I'm Apostolos Goudzinis, and I'm a partner at Milbank. And it's a great pleasure to be presenting this panel today on the internationalization of the capital markets and the prospects of Greek issuers, financials, and corporates in connection with attracting foreign investors in the field of capital markets. I'm joined today by three great panelists. We have Yiannos Kondopoulos, who is the CEO of the Athens Stock Exchange, who cannot be with us today, unfortunately, in physical presence, but he can see us and we can hear him. And then here with me, I have two great friends and colleagues, Dimitris Kofitsas, who is a senior executive at Goldman Sachs, running the Greek and Cypriot business and many other things. And Konstantinos Konstopoulos, again, a senior managing director who also runs Greece with great success. The two of them are very experienced investment bankers, and hopefully they will give us a good summary of what the state of play is today and what we can expect in 2025. Only in 30 seconds, if I may, I'll do a brief introduction, and then I will hand over to Yiannos to talk to us about the Athens Stock Exchange, developments in 2024, and his outlook for 2025. But as a capital markets lawyer, what I would say is a good snapshot of reality at beginning of December 2024 is the following. I think globally, certainly in the rich world, North America and Europe, there has been a soft landing in relation to the recessionary fears as a result of high interest rates. I think inflation in most rich countries is going down, and is declining. Certainly, more or less and broadly, the economic prospects in the developed world are sunnier. And the international financial markets have responded in the usual way, mostly up on the equities, and then in the debt markets, the declining interest rates have obviously created a very positive momentum. I would say that, for example, last 2 weeks, we saw the highest primary issuance of debt in North America. We had about 63 billion of new primary issuance in North American markets only in the last 2 weeks. And then on each of the active weeks in October and November, we have seen record primary issuance in the European markets, both investment grade and leveraged finance. So overall, with a lot of caveats, but overall a positive view. So against that international background, Yiannos, we would like you to talk to us about the Athens Stock Exchange, the prospects of the Greek organized market, what you've seen in 2024, and your outlook for 2025. So the floor is yours.
Thank you, Apostol. I was actually debating whether I should keep my camera open or not. My wife often tells me I have a great face for the radio, but I guess you've lost, and I'm going to keep it open. I have to say also, there's a caveat to whatever I say next, because I've been a bit under the weather. I'm on my way out, but hopefully I'll make sense in terms of what I say. Starting with the trends, we have the 4th year in a row of most likely, year is not over, but most likely we'll do well. It will be a positive year. In terms of trading activity, we had another year of significant double-digit increase in our trading activity, which is one of the main aspects of what we're looking to improve here. And it's also the 3rd year in a row that we had this significant increase. Foreign institutional investors have remained dominant, actually have become even more dominant, more in terms, both in terms of ownership, also in terms of trading activity in our market. What really underpins all this is the excellent fundamentals of our listed companies for the third year in a row. It looks like we're going to make a 15, 16-year record in terms of the bottom line, both for a number of individual firms and also in totality. The market this year raised about 5 billion euros, evenly split between new capital and private placements. So things are starting to move, if I may say. Now, in terms of what I consider to be pivotal events for 2024 in our markets, and I think hopefully it signifies that we've been busy, is that we had the introduction of a new rule book for our markets after 24 years, which aimed at protecting the end investor and principally emphasizing the use of free float for listed companies and ultimately aiming at improving liquidity. We had the onset of a new pricing policy for our trading members to encourage them to participate in the market and add depth. That has also been successful so far. We had the introduction of an upgrade of our trading system, which is homegrown. We fell in terms of, about a month ago, in terms of our speed of trading below a millisecond. And we've also reached some significant landmarks in terms of the speed processing of messages and data dissemination. So I think we're in a different stage than we were a few years in, even as early as last year. Importantly, we have proceeded to join the watch list from two agencies for an upgrade to developed market status from S&P and FTSE Russell. So I think we started that race in 2024. When it comes to the chapter of ESG, we have published our new ESG market disclosure guide, which I think is the reference guide for the Greek market. I should add that we are the first exchange in Europe to have just concluded a few weeks ago a double materiality study, which is, I'm not going to go into details of what that means, but it's a significant reference point in all things ESG. We had, aside from this one, which I didn't manage to make it live, but we had some critical roadshows in strategizing and thinking about extroversion for the Greek market with Morgan Stanley, JP Morgan, Société Générale in London, New York, and in Paris. We had three very interesting roadshows concluding for our mid-caps, and also for the first time, we had a very successful small-cap conference in Greece where we had more than 100 institutional investors present. So we've covered the gamut, and we are planning to remain very active into next year.
Yano, can I ask you, can I go back to the point you were making about moving from the emerging market index? Just for background, can you enlighten us what is the significance of that development? How is that going to be useful, and what are you expecting to derive from that?
Well, in a very short way of stating it, if you think you have a good product, and especially if you think you have a good product in a difficult business cycle internationally, you want to expose that good product to the largest possible audience. And the largest, deeper audience is basically the group of investors that focus on developed markets. At this stage, we're still labeled as an emerging market, and that means that a lot of our active investors are not able to invest in the Greek Stock Exchange and its listed companies. So the whole purpose is to effectively increase the gamut of international investors, institutional investors that invest in Greece, and ultimately give the subsequent benefits to our listed companies and the market overall in terms of liquidity.
Thank you, Yano. I think, Yano, you'll appreciate we have on the panel two of the great houses that will bring you both new investors and new issuers. So I will turn to them just to understand a little bit your perspective. I mean, we've listened to Yanos and his outlook for the market. Maybe systematically, maybe we can hit debt capital markets, equity capital markets, sovereign, and then perhaps we'll see if there's any other business in the end, maybe private equity, etc. But Dimitri, maybe I'll start with you, and then Costa, please feel free to
thank you, Apostole.
To make a comment. Yes.
Yeah, before we go to DCM, I would like to also comment on Yanos about EM versus DM status. Politically, it makes sense for Greece to be at developed market status. Italy, Spain are for years. There are long-term benefits for that. Fully agree. However, we think that there will be a period of adjustment. You will lose a lot of emerging market funds if this will happen. It will be a period of pain, short term, for the long term, basically, benefit. And currently, people want to invest in Philippines, in Turkey, in Poland, they invest in Greece, right? So if you are in DM status, people will invest in NVIDIA or in Microsoft, and then or at LBG or Eurobank. So there is a big debate around that.
But don't you think we should, however, take the short-term pay and sort of move category, move class?
Absolutely. But one more data point. We've done an analysis for Israel, which, again, was 10 years ago, an emerging market went to developed market status, and there was a 50 billion of outflows in the first year because of this transition. Fully agree, long-term, this should be the target, but will be a bit of adjustment. I don't know, Konstantin, if you agree with that.
Fully agree. I have to say I've never felt closer to Goldman than today, right?
Yes.
Sharing a panel, sharing a microphone as well. But jokes aside, look, I think the points that everyone is making are absolutely valid. And then, in the end of the day, if we have to keep one message out of this year, which was arguably a very, very busy year for all of us, is that the markets are wide open. Investors are looking towards Greece now, not under the flavor or the context of an emerging market or a story that is coming out of its ashes, but actually a mature market. Obviously, this comes with expectations. It comes also with great opportunity, Apostole, as you said, because I feel that Greek issuers nowadays can actually look into the long term and actually make decisions for a very sustainable capital structure looking ahead.
What are people telling you, like investors? Obviously, there's a lot of positive news. There is often a triumphant tone in conferences like this. I mean, there must be also some concerns. What do you think? What do you think the people are raising?
No, it's a very good question, and I think it sort of like touches a little bit on what you said before and what Dimitri said, which is, I think the mindset of Greek issuers, no matter if we're talking about equity, we're talking about debt, or about businesses that are thinking of selling a large minority or a majority to a private equity, as you said, I think they need to move a little bit away from the mindset of the Greek recovery story, the miracle of Greece, and actually focus to what it's important, which is solid business plans, solid management teams, delivering a vision, a strategy, and being consistent, right? And this is how I feel Greek corporates and Greek issuers will be judged upon in the next few years as we're moving to the developed market status now.
Yeah, look, on this point, Apostole, I would think about three key pillars. One is the macro, which I think Greece ticks the box. So there's no question about that, about political stability, growth premium compared to Eurozone. Number two is sector, as Konstantinos said. I think people have become more micro and non-macro, so they need to see the sector. For example, in 2024, we see banks benefiting from interest rates, companies active in the energy sector. People are a bit more cautious on commodity-linked companies, right? Because of the super cycle having commodities, people are afraid that power price will go down, commodities will go down, so companies are exposed, a lot of exposed in commodity basically prices, and then it'd be more cautious. And number three, I would say technical, in the point of Yanos or liquidity. Look, we have, let's say, 10, 15, on the equity side, right? 10, 15 big companies in Greece, maybe 20. 5 million per day, I think, is the minimum that people will look at this. Ideally, 10 million, right? Especially, if you go to the Middle East and the Gulf, the big Middle East sovereign funds, they need to see 10 million per day liquidity, which is a very, very high mark. But I think we need to see more liquidity. And this will happen through, education, investor marketing, and also placements that are happening and will happen in the next few years.
Konstantine, on the ECM front, we've seen a very strong market in 2024. There were the HFSF placements. the first very significant new IPO on the Athens Stock Exchange with Athens International Airport, a few other deals. Can you talk a little bit about the lessons that we've learned during this this period from from investors on the attractiveness, what they're looking for, any interesting points that came up? As you said, it's no longer, or maybe it is a recovery story, but people are always looking ahead for new opportunities. Just give us a sense of what went on in these deals.
Sure. No, Apostoli, you're absolutely right. It was, as I said in the beginning, a busy year. We had the banks, or actually HFSF, exiting the stakes of the banks. We had Piraeus Bank and NBG doing large placements. Obviously, it was the Synergy deal, the one that my friend and colleague Dimitris has done an excellent job with. We had a placement on Mytilineos, Metlen, and of course also a deal with Jumbo. So I struggle to remember a year in which ECM was so topical, was so busy, and I think the lesson is what I said before. I think the markets are there. People are keen to invest in Greek companies with a long-term vision. This was not the case up until very recently. So good management teams, solid business plans, they do get a lot of traction. And I think if there is one message that potentially we can actually derive from that is that you don't need to be the biggest, the most visible company out of Greece. By doing a proper job, by having a vision that you can clearly communicate, smaller issuers can actually come to the market. They can internationalize their capital their capital structure, and people or investors are very receptive to that. And I think that's the one thing that I would like to keep from this year. People want to see more coming out of Greece.
Dimitri, do you? I mean, for this group here, we have done a lot of deals over the years, and we used to see more or less the same people, coming back again and again. The bank recapitalizations, some of the rescue deals that were sort of the more difficult deals. Do you see now new classes of investors being interested in Greece that had not come to the country before? And have we seen that in 2024, or is this still work in progress?
Yeah, look, I think that's a very important question. So I think we have seen a number of investors more active in the country the past 2 years because of big placements, mainly the banks and some corporates. So I don't think any of the top investors in the US or in Europe they need another listing or to invest in another country. I think Athens and Greece can offer, especially the big companies. But I think there is a pool of investors who are not yet active. If you go to Asia, very limited activity across asset classes. GGBs, DCM, ECM, nobody's investing in Greece from Asia, for example, right? Middle East is, again, pool of capital is developing. We've seen some big accounts active in ECM, but I think we need to see more. And number 3, continental Europe has also played a role. So Italy, Spain, France is a big investor, especially on the fixed income side. And also, look, the Greek audience has been very helpful in recent transactions, right? So through the Greek banks and the Greek brokers, they have helped a lot to drive execution and price tension, which, don't forget, this is a very important element. So having a healthy Greek retail to trade the stocks and support transaction is super important. In Turkey they have it, in Italy they have it, in Spain they have it. Because of the crisis, we never had this, right? So I think gradually, as macro is improving, we need to see policy, right, to improve maybe tax incentives. I'm not a politician, but maybe, we need to incentivize people, retail, private bank, to invest more in Greek securities. People buy real estate in Greece primarily, right? But they invest less on Greek stocks, right, or fixed income.
Fully agree, and I think that's a point that it's extremely important. I think another lesson that we're seeing over the past 2 years, and if I remember correctly, I also tried to touch upon it on last year's panel, is that the Greek ecosystem is now developing, and of course, the stock market is part of this ecosystem, probably the most important pillar of this ecosystem. But then again, everything around it, it seems to be getting at the right place to support the healthy functioning of the market. And Dimitris is right. And you did mention that other markets in Europe do have it. It feels that Greece is on the right path. But it's also very important to be seeing that these markets, which I think also you mentioned, are very helpful to the Greek effort, right? On the fixed income side, it was probably a year we saw a record Italian interest in the issuances, for example, which is it shows not only that the rest of continental Europe is coming along to see the opportunity in Greece, but also the fact that individual countries are developing their own ecosystems that can be very, very helpful towards issuers.
Yano, I don't know if you can hear this conversation, but the summary, and there's a question coming for you. The summary is that strong and efficient public markets, including retail investors and, of course, institutionals, including in an organized fashion like the Athens Stock Exchange, are very important not only for the existing pool of capital, but also very important for new investment, because obviously private equity funds or private venture capital, they need an exit, right? So it's an ecosystem where the liquidity of the organized market has a positive effect on the willingness of foreign investors to do other forms of investment in the hope that there is a strong and liquid market to use for an exit. So if that is true and you agree with that, maybe on the institutional front, my question is, are you broadly happy with the institutional and legal support for the organized markets in Greece? Are there things that you want to see perhaps improving a bit? I know that you're very active in this regard, and I know that you have a great relationship with the Hellenic Capital Markets Commission. But from your perspective, is the reform agenda complete, or are things that you want to see improving on the horizon?
All right. Let me first disagree with something that was stated before, respectfully. But what Dimitri said, I think, it needs a little bit more digging. To begin with, analysts have said, aside from that we shouldn't aim for developed market status, that it won't happen. Okay, that was a few months ago. So let's wake up, start thinking that analysts sometimes might not be that correct or all over. We need to do our own homework. And ultimately, I think we need to have, that's important, and I said that 2 years ago, we need to have a winning mentality here. We have an excellent product, both macro and micro. We need to believe in it, and we need to showcase it. And it's not an accident that the foreign investors have taken most of the upside so far. Okay, I think what was said before in terms of the retail, taking time to come up with to the opportunities that the Greek market has to offer, is unfortunately a natural implication. We've had significant increase in retail participation in Greece too, but from very low levels. I think that's the last chapter that needs to be resolved. But ultimately, we need to understand that we need to be aiming for, the Super League of the markets. We cannot be aiming for, second category, second division. You can always do well in the second division, but bad things tend to happen in second division, and we know that in difficult markets. So if people are concerned about what the future lies ahead, you want to have the right label attached to you. Also, just to be more specific, I think the Israel example is totally misplaced. Israel is not part of Europe. When you're part of Europe, that means that when you move to developed markets where they tend to emphasize a lot the sectoral allocation, a lot of your big companies will automatically go into sectoral indices, and that's going to make a huge difference. The job of the good brokers and the brokers who are going to take advantage of this opportunity is to find and take advantage of the transition, the right end investors who will actually jump into that transition. And the metric that matters here is not the passive investors. The passive investors in developed markets is roughly about $1 trillion, same number in emerging markets. But in active investors, the gap is tremendous. There are about more than 14 trillion of assets invested in developed markets and just 1 trillion of actively disposed assets looking at emerging markets. So as I said before, if you have a good product and you are in a good cycle, you want to go there. Now, just to give the last caveat, if I'm wrong, I can always press the button and put myself back into emerging markets. But unfortunately, I cannot press the button and go to developed markets. I need to do a lot of work. So a lot of this work has already taken place. And thanks to the efforts of a lot of people in the ecosystem, both locally and abroad, including the two gentlemen that are part of our panel. So what I want to say is aim high, and that I think applies to all of us. What I want to see in terms, I want to answer your question, so I think I left myself probably 10 seconds to answer your second question. But look, I think, as I said, where we're lacking is the retail side, and I think that naturally will wake up. But we need to give them some incentives. I don't think that it's only tax incentives that make the difference, but they help. They help at least trigger the interest in general. But what I think we need to do is educate. And as we probably most of your attendees know, you cannot really force Greeks into a meeting room and teach them stuff about economic literacy. At the end of the day, what matters is personal interest. On that, they're very, very similar to the Americans. So what we need to do, what I think is missing, and I'm going to work very strongly on that, is the introduction of an individual retirement account in Greece. Because I think that's what's going to be the main motivation and the right way of educating young Greeks, especially, of the benefits of becoming a nation of savers and investors. Now, short term, just not to make it, an aspirational comment here, there is a legislation that's coming in the course of the next few months, hopefully, probably the very first quarter of the year, that the Ministry of Finance has been preparing for capital markets. We worked a lot on our part in terms of giving backdrop and information and direction to the extent possible to the people who are going to pull the trigger here. And I think it's going to be important. And I'm not going to say anything more about it because I don't want to steal the thunder of the people who actually worked on that. But, stay tuned. It's coming up.
Thank you very much, Gianno. I don't know, Dimitri, if you want to give maybe a quick comment on... my view is that I don't think you said that it was going to be a disaster. I think you were a very measured.
I fully agree with Janos that this is the aspiration, this is the target, but I don't think there is free lunch, right? So with some pain, I think as the market is developing, it becomes more liquid, we can sustain the pain and go to the next direction. I think, Jano, we agree. I'm just saying there is a bumpy road, it's not a downhill. So I think one other point, which I think we didn't cover, is a bit private equity activity in Greece. I think if you look at the ECM activity the last 2 years, it's primarily government-led. Athens Airport, government-led. Piraeus NBG, government-led. We haven't seen the corporate sector. I mean, obviously, Metlen, Jumbo, there are smaller placements, yes, but the big transactions primarily were government initiated, right? So we haven't seen private equity companies active in Greece thinking IPO as an exit. I think that's something we need to work on, right? And
it's very important because if
to give an example, the biggest IPO in Europe was Galderma in Switzerland. It was a private equity backed transaction. They do Botox and fillers. That was a sponsor-backed IPO. So in Greece, we don't have that yet, but there is a lot of infra investors, private equity investors who are active. I'm not saying, we are, all of them are active, but I don't think we need to do more work on that.
But you're not saying, though, that if you like, the smaller local capital market is the reason we don't see. It's one of the reasons, right? But there's probably other structural issues why private equity has not yet, or mainstream buyout funds have not yet entered the country. Maybe it's the size of the local targets. It's a smaller market, and some of them are quite significant. So maybe there are other reasons there as well. But I don't know, Konstantinos, what's your view?
Look, my view is that if you think about it, and if you look at the size of the market, the reality is that over the last 2-3 years, we have actually seen an activity of private equity money or private equity-like money entering the country. It was back in 2022 that the Sunny Ecos transaction closed and it was sold to GIC. Obviously, even this year we had Turn Energy being sold to Masdar. Masdar is not a private equity per se, but it's closer to this sort of like private market, majority control type of investor that the private equity usually is. We sold the minority stake of Pharos, which is a very prominent pharmaceutical business, and it was actually partly an exit of a local private equity fund that sold a 25% stake plus some stake that the initial founders added, and then Armira, which is a German family office private equity investor, entered Greece and the market for the first time. So I think the activity is increasing. We do see new names coming in, people that were not around Greece before, or people that would literally hang up on us on the line when we mentioned an opportunity in Greece. We had Mid Europa buying Famar. That's another private equity type of transaction. So my gut feeling is that to the extent that the Greek capital markets continue function the way they do, and the more we see of those private equity funds actually buying into the Greek economy and Greek companies, statistically speaking, some of these exits should be through the IPO market. Obviously, it's upon the ecosystem we discussed, also upon the banks as well, to make sure that some of these activities directed to the Greek capital markets.
That's great. I think that's a wrap then. Thank you very much. Thank you all, and thank you, Yanos. Thank you.